We're going to talk about the difference between the economy and the financial markets. So what is the difference? So we're going to talk about that today. Hi, my name is Dee, and welcome to the Money Growth Academy. This is where we demystify the stock market, simplify investing, and multiply your opportunities for financial success. So in a previous video I did just a few days ago called Another Fed Rate Hike, Should I Sell My Stocks? I tried to calm market fears by sharing with you all just very briefly kind of what I thought about the economy and the financial markets, and the fact that they are two very different things, and really kind of the importance of knowing the difference between the two. But it is very common for people to maybe use those terms interchangeably when in fact they are very different. And so I wanted to talk about that a little bit today. And this is the quote that I used in that very same video. And it said, and this video appeared online on an article on the CBS News website Money Watch, and it was by Larry Swidrow, that appeared somewhere back in October 15th, 2010. But this is what he said. He said, the big difference between the market and the economy is that the market is forward-looking, and it's actually unexpected events that primarily drive future stock prices. Thus, it doesn't even matter whether future news is good or bad. So what matters is whether it's better or worse than already expected. So in summary, a way to understand the difference is to remember the economy is what is happening right now, and the stock market is about what's happening in the future, right? It's what's happening in the future, good or bad. Now, when you understand this, you'll get less fearful about the market in general and the various downturns. You'll get less concerned about. There was a great article written today. It was on Yahoo Finance. It was written by Emily McCormick, called Nike Smashes Expectations, Stock Surges. And I think this article does a great job of illustrating what Larry Swidrow was saying. So think about it. The entire stock market seems like it's just collapsing daily. You know, yesterday it was 1.54%. Today it dropped 1.58% here on Thursday. And so it just looks like it's just going crazy. And yet in the midst of this, Nike stock price surges. Now, remember the words from Larry, our buddy Larry, right? He said the big difference between the market and the economy is that the market is forward-looking, and it's actually unexpected events that primarily drive stock prices. And again, the economy is what's happening right now. The stock market is about what's happening in the future, or what's expected to happen in the future, good or bad. So Nike beat expectations and the stock prices surged. I love this quote right here. It says, Nike reported quarterly results that beat Wall Street's estimates on the top and bottom lines. Again, there's that word estimate. So they beat, right? They exceeded. So they had this forecast, this projection back in the past where they thought gross margins were going to get, earnings per share was going to get, and it exceeded that. So how did they do this? Well, here's a few things that come up. Number one, they improved their gross profit margins. They obviously posted strong sales both in North America and China this past quarter. They delivered adjusted earnings of 52 cents per share, and listen to this, exceeding consensus estimates of 46 cents per share. So again, somewhere in the past, they projected 46 cents per share, and they exceeded that by going to 52 cents per share. Revenue came in at 9.37 billion for the quarter, also beating estimates of 91.7 billion. 9.17 billion. They posted gross profit margins of 43.8 for the quarter, exceeding consensus estimates of 43.5. So not wildly crazy, right? But they beat, right? So the thing is, they beat it. Again, it's about those expectations and exceeding those, or falling back from those. Could have some dire reporting numbers. So as a result, shares of Nike surged 8.1% to $73 today at closing, about right around 4:30 or so Eastern time. So what seems to be driving these factors, and this is what Mark Parker, the chairman and CEO of Nike, indicated several factors. He said a full innovation pipeline, so that could be new products coming on. That could be ways that they're utilizing social media, how they're utilizing television. So some different innovative things that they're doing as they move within this innovative pipeline. They're pulling things in. So the ability to create the most personal, responsive retail experience in the industry. He also said, and a supply chain that's delivering speed at scale. So they think that those are some of the competitive advantages that have helped them make the improvements in the reporting numbers that we see this quarter, because they were back a little bit last quarter. And you got to remember, this is all post Colin Kaepernick, right? That, you know, people burning shoes and they're never going to wear Nike again and all this stuff. So this is post all that happening. So here's the thing I want you to get from this short video is this. So as you start to think about, you know, making knee-jerk reactions and to various positions you have in the market, because I don't know, because analysts or current economic sentiments expressed by economists, regardless of who they are, right? I want you to maybe, I don't know, take a breath and remember the economy and the market, they really are two different things. And the economy is what is happening right now. The market is what is expected to happen in the future, right? Good or bad. And it's that thing that's what drives stock prices. It's the expectation, good or bad, of what's going to happen in the future. Now, look, I'm not telling you to buy or sell or hold. What I am asking you to do is to be very clear on your decision of whether it is to buy, sell, hold. I'm just asking you to be clear on your decisions to do either and to make sure you know why you're making that decision. I'm going to tell you, my biggest concern today is how the Feds navigate through this debt cycle, right? Because I have a sense, and I kind of believe, and I'm not by myself with this, that we're in that final phase of the debt cycle, and so we're in that midpoint of that final phase. And so I'm very interested in how the Fed's going to help negotiate that, because we've already tried cheap money, right? We've already tried the stimulus package, and I talked about that in the previous video. It's time to come off that stimulus. So that may not be the answer. Matter of fact, I'm going to tell you that's not going to be the answer. So anyway, we'll talk about that in an upcoming video. So thanks for joining us at Money Growth Academy. Again, this is where we really seek to demystify the stock market, simplify investing, and multiply your opportunities for financial success. We hope you'll come watch some more videos. If you haven't already done so, make sure you subscribe. We'd love to hear from you. Drop us a line in the comments. And I tell you what, we'll see you next time. Thanks.